Hey friends, welcome to Money RX for CRNAs and nurse practitioners. I'm Brett Fellows, and I'm really glad you're here today. If you're listening to this, chances are that you have built an incredible nursing career. Whether you're a nurse practitioner, a clinical nurse specialist, or a CRNA, you have worked long shifts. You have held everything together in very high-stress situations, and you have poured yourself into your patients and your family. And if you're a high earner making $120,000 as an NP or $200,000 plus as a CRNA, you probably think Medicare will be simple. I mean, you've paid your taxes, you have earned it. So Medicare Part A and Part B should be basically free, right? Well, I have some news for you. Now here's a situation that might resonate. A nurse just received her Medicare Part B premium notice, and instead of the standard $202 per month, her premium was going to be $649 per month. And her husband, same thing. Now that's an extra $894 per month, more than $10,000 per year, just in Medicare Part B premiums. And she says to me, Brett, I thought Medicare was supposed to be affordable. How is this possible? And the answer is something called IRMAA. And if you are a high-earning nurse, you need to know about this before you turn age 65. Now, the problem isn't that Medicare made a mistake. The problem is that most high-earning nurses have no idea about IRMAA. Now, IRMAA stands for Income-Related Monthly Adjustment Amount. It is essentially a surcharge on your Medicare Part B and Part D premiums based on your income from 2 years ago. Think about that for a second. You are being charged based on income you earned 2 years in the past. So your 2026 Medicare premiums are based on your 2024 tax returns. Now, for nurses earning good money, and let's be honest, if you're a nurse practitioner making $120,000 or a CRNA making over $200,000 or a clinical nurse specialist with years of experience, you are likely going to hit these IRMAA thresholds. But here's what makes this especially painful for nurses. Again, you have dedicated your career to helping other people. You have worked long shifts and dealt with difficult situations. You have earned every dollar of that high income. Yet Medicare treats high earners as if they haven't paid their fair share along the way, even though you've been paying Medicare taxes on every paycheck for decades. And it gets worse. Most nurses find out about IRMAA the same way the person I mentioned before did, when they get that shocking premium notice in the mail. No one prepared them for it. No one explained how it works. No one showed them strategies to potentially reduce it. So the real problem is IRMAA can completely derail your retirement budget if you don't plan for it. We're talking about potentially thousands of dollars per year in additional premiums. So for a couple where both spouses are high-earning nurses, it can be even more devastating. But there's an even deeper issue here that affects nurses specifically. Most nurses work in high-stress careers where burnout is real. So you might be planning to retire earlier than originally expected because the physical and emotional demands become unsustainable. But if you don't understand IRMAA, you might be looking at your retirement income needs completely wrong. You might think, well, I need to replace 80% of my working income in retirement. but you might actually need to replace your working income plus thousands of dollars in IRMAA surcharges. Or maybe you are in the opposite situation. Maybe you retired last year and your income dropped significantly, but Medicare is still charging you IRMAA based on your high earning years. So you're paying penalties on income you are no longer making. And here's the thing. There are strategies to deal with this. There are ways to potentially reduce or eliminate IRMAA, but most nurses don't know about them. So let me walk you through what you need to know about IRMAA and give you 5 specific strategies. But first, let's understand how IRMAA works in 2026. The standard Medicare Part B premium is $202.90 per month. But if you're a single filer and your modified adjusted gross income was over $109,000 in 2024, you will pay more. Here's the breakdown for single filers. $109,000 to $137,000, you pay $284 per month. $137,000 to $171,000, you pay $406 per month. $171,000 to $205,000, you pay $527 per month. And $205,000 to $500,000, you pay $649 per month. And last but not least, over $500,000 in income, you pay $690 per month. Now, if you are married filing jointly, guess what? Double those income thresholds. Now, IRMAA also applies to Medicare Part D drug coverage. So you are hit with surcharges on both. Now, here are the 5 strategies to potentially reduce IRMAA. If you've retired or your income has dropped significantly, you can appeal your IRMAA determination. Now, this is huge for nurses who've recently retired. Medicare will look at life-changing events like work stoppage, divorce, or death of a spouse. Now, you'll need documentation like a letter from your employer confirming your retirement, but this can save you thousands of dollars. If you're age 73 or older and have to take required minimum distributions from, say, your IRA, you can send that money directly to charity instead of taking it as taxable income. This keeps the distribution from increasing your modified adjusted gross income and thusly potentially bumping you into higher IRMAA brackets. Now, this might sound counterintuitive, but converting traditional IRA money to Roth during what we call your gap years, again, that's after you retire, but before you hit age 73 and have to take required minimum distributions, can actually help reduce future IRMAA charges. You pay taxes now on the conversion, but it reduces the size of your traditional IRAs and the required minimum distributions that you will have to take later. If you're still working and can contribute to a 403B, a 457 plan, or even a traditional IRA, those contributions reduce your current year's taxable income. This can keep you below IRMAA thresholds. And making a large charitable contribution to what's known as a donor-advised fund can provide a significant tax deduction in the year you contribute, potentially keeping you below IRMAA thresholds. Now, you don't have to give all the money to charity immediately. You can distribute it over several years in the future. So here's what you need to do right now. If you are still working, look at your current income and project where you might fall in the IRMAA brackets. If you are close to a threshold, see if you can use some of these strategies to stay below it. Now, if you're planning to retire soon, understand that your Medicare premiums might be much higher than you expect for the first few years of retirement based on your higher earning years in the past. So budget for this. And if you've recently retired, look into the appeals process immediately. Do not wait. You have a limited window to appeal, and this could save you significant money. And if you're already in Medicare, review your IRMAA determination each year. If your circumstances have changed, you may be able to appeal as well. The key insight for nurses is this: IRMAA isn't just about your Medicare premiums. It's about understanding how your entire retirement income strategy works together. And as a nurse, you have likely been focused on saving in tax-deferred accounts like your 403B for years. And that's great for reducing taxes while you are working. But it can create a tax bomb in retirement that triggers higher IRMAA charges. This is why comprehensive retirement planning is so important. You need someone who understands both the unique challenges nurses face and the complex rules around Medicare, taxes, and retirement income planning. If you are a high-earning nurse and this episode raised questions about your own situation, don't wait until you get that shocking Medicare premium notice. The decisions you make now about retirement accounts or charitable giving and retirement timing can have a huge impact on your Medicare costs later. So remember, Medicare Part B premium surcharges can cost you thousands of dollars per year. But with proper planning, many of these costs can be reduced or avoided entirely. You have spent your entire career taking care of everyone else, your patients, your families, your communities. So you deserve a retirement that does not come with unexpected financial surprises. Thanks for listening to Money RX for CRNAs and nurse practitioners. I'm Brett Fellows, and until next time, take care of yourself and take care of your money.
This podcast is for informational and entertainment purposes only. It should not be relied upon as a basis for investment decisions. This podcast does not engage in rendering legal, financial, or other professional services.